What's going on, everyone? This is episode 4, I believe, of the Gold Bootcamp series, and today I'm just going to be going over a couple of logistic type of things that that just apply to like new day opening gaps, new week opening gaps, and just stuff like that that I really haven't went over. So a bunch of like miscellaneous things, if you want to call it that. But uh, so far, right? Today is Sunday, and we opened about 37 minutes ago, as you guys can see here in the bottom right corner. And when we form a new day or a new week, especially, we like to do a couple of things. Now, first of all, as you guys can see, we usually form a gap, especially on gold, and we usually don't really fill it, right? We just formed this one 30 minutes ago, and we haven't completely filled it, right? We have another one, like this one here was from last week, I believe. Yeah, from January 2nd, right? Yet to fill that gap. We have one from the week before, which would have been this. We have this one here, which was the new year opening gap, not really a new week. But right, just so you guys can see, we just have like this one that was filled, but we just form new gaps, and we usually don't fill them in until later throughout the week. Now, the reason this is important is if you're trying to take a trade based off of this, right, and you see price open higher, and you're like, wow, this is cool, I want to see a fill of this gap. That's unrealistic. That's really unrealistic because we do sometimes fill these gaps, but we never do on Sunday. So make sure when you're taking these trades that you know that price could retrace back into here, but very unrealistic that we fill it. Why? Because it's a big like void for orders, but it usually gets filled during a New York session, or usually New York session, where there's the most volatility in the markets. That's really true for new week opening gaps. Also true for new day opening gaps too, just because, right, it's another gap. You can use it the same way. But other than that, what else do I want to talk about? I'm gonna just go over a daily bias type of thing for you guys, just because I am planning on trading later. Again, it's 5:39 as of right now, but probably looking to take a trade at around 7. So I'm gonna go and show you guys how I approach, right, these new days or new weeks into trading, right? So obviously I know that we formed this gap, but I'm not really looking for a retrace much lower, like from here to here, because I just think that's unrealistic, especially now that we have all-time highs above us. As you guys can see, I'm on the 4-hour time frame. However, we do have this 4-hour bearish trade value gap. Now, you have to ask yourself in this scenario, which one is more important? Is it more important for orders to get filled here and then shoot back down, look for a retrace, and then maybe go up? Or what I believe is we can probably take out these orders and then come back down and then refill all of those gaps. Now, why am I saying that? Well, if we're looking back on the previous couple of days, right, all we're seeing is a crazy uptrend. As you guys can see, we're moving up. What does that represent? Not a lot of selling power. Now, just because we tap into a bearish trade value gap, which is a imbalance of sellers to buyers, does that mean that these sellers are more important than these buyers here, right? Now, you might be asking, well, we're not retracing back into the zone. That's true. However, all of this buying power down here indicates that we're most likely moving up, especially because we have all-time highs right above us, and that's a very big sign because gold is usually at all-time highs. That's a very strong draw on liquidity. Now, what else can we look at, right? We have the 1 hour, and you just see that, right? Crazy big Drake up candle. We have an unfilled 1 hour gap. Again, do I think that price is going to come down and fill this new week opening gap today? No. I just literally talked about how I don't believe that this is going to get filled anytime soon, right? Maybe tomorrow, maybe the day after, but just not really likely to get filled today. And that's a big thing because I can't be looking for a crazy retrace down here if we're not going to be filling in this gap, right? I hope that makes sense. Anyways, so what am I trying to look for? Well, again, I'm trying to look for a 15-minute fair value gap. As of right now, we have this one here, and we could form this one here. What do we also have in this middle fair value gap? Well, we also would have equilibrium if we do make a high, right? And that's about it, right? So if I'm going to be trading today, I'm going to need to see a retrace back into a 15-minute fair value gap, and then I'm going to be needing to see the mish model present itself, or what I like to call it, the continuation strat again, right? We have imbalances here, retrace, highest time frame inversion with this. Oh, highest time frame inversion, enter long, stops beneath here, targeting all-time highs. Beautiful. That would be ideal. If that's not gonna play out, I doubt I'm gonna be trading. January has been all right in terms of some days are really, really good, some days are pretty mid, especially in Asia session this past week. It was kind of rough. I think I took one win and then a couple break evens, I believe, but that's about it. As you guys can see, right, as of right now, we're trending a lot higher than this fair value gap, which means that we most likely want to continue higher. And that's the trade I'm going to be taking today. So a really short video for you guys. Don't want to hold you and waste your time. And that's about it. So that's how to trade the new day open, the new week open, and just a daily bias. I will be making a trade recap if I trade and if I win or if I lose. If I get break evened out, you guys will probably see it on my Insta or my TikTok stories, but that's about it. So have a great rest of your days, and I will catch you guys later.